Hello, welcome to this video. This is British US dollar. That is GBP JPY on the weekly time frame. I want to give my subjective bias on what I'm expecting GBP USD to do next week. Just a prediction, and a prediction I don't always turn to be the way we expect. So beginning on the weekly, let's begin from the higher time frame. This is just a quick one. We are on the monthly time frame. We are seeing the bullish version of the standard trading model being mitigated over there. We can see with our model we need a sweep of liquidity with the first break of structure. This lower low, this way you take your entry, potentially target these higher highs. So what we can see here is there was a sweep of liquidity here, kind of sweep of liquidity. And then the first break of structure on this leg that you can see, the very conspicuous one is this guy here, around here. You can see right here. So this lower low becomes our point of entry. Take our buy here to potentially take these higher highs. That is following the logic of this model. So that means we're expecting these higher highs to be taken, right? And another confluence that can give us confidence that this high can be taken is the formation of this guy, this FVG right here, this monthly FVG. Let me show you in the next picture. Right here, you can see this guy. There was a monthly FVG here that has just been formed. Yes. Now the question that we should ask ourselves: will the market take this high first before we come to fill this monthly FVG, or will this FVG be filled first before the market rallies up to take these high highs? Yeah. Kinda we are in a dilemma, but we can see the way this candle closed. I would like this guy to be taken first, right? Before we can mitigate this internal liquidity here. Have to take this external liquidity before we come to fill this internal liquidity. Yep. Moving on. We are now on the weekly. This is the same chart on the weekly time frame. This is just a lower time frame. We can see the monthly FVG was around somewhere around here, around there. Yeah, it has just removed it. See the market currently reacting off of this guy, right? I just swept liquidity. Swept this liquidity. We're reacting off that zone. After sweeping that liquidity, the nearest internal liquidity that you can see was this guy here. Liquidity was lying at the wick of this guy down here, right? Before we got there, we filled faster this daily FVG. This daily FVG was not filled. This one here, you just skipped. Look at the way this candle closed. It closed up, so it never gave a chance of the market to come back and refill it. So we went up. So we swept this internal liquidity, and logically, after we take the internal liquidity, still follows the model, the bullish version. What we can see here, we can see a sweep of liquidity. This flash here, if this flash here means that there was some liquidity taken here. Yeah, there's still sweep of liquidity. Then if you look for the first break of structure, that is very clear. Okay. The clearest first break of structure on this leg that we can see. Oh man, why is it? Can you say here? Okay. Maybe let's just say that. First break of, then its lower low is this guy, huh? Maybe. Okay, let's move on. And then we'll be expecting this guy to be taken, this high to be taken. Right? This following this model, we expect this high to be taken. Will that high be taken? Yep. Let's drop down on the lower time frame to see where we can potentially trade next week. Because next week, I will be anticipating this higher to be taken. That is on the weekly time frame. But again, there was this sweep of liquidity. Will we manipulate? Will we manipulate? There was a sweep of liquidity. Okay. Then we're still following. Okay. Now, what about following? We're following the bullish model. We have to sweep this guy. Then take this high. But again, we had a sweep of liquidity, right? Where was the first break of structure on this leg? Let's drop down on the lower time frame to see whether the first break of structure was mitigated after that sweep of liquidity. Now coming on the daily time frame, what we can see clearly is that we can see this market came swept. There's all this happened here. Yeah, there was a kind of some fast break of structure with this market came for it around here, following the bullish version of the standard trading model. Then we moved up to take this high. Yeah, right. So we came here, we feel this a daily FVG reacting off of, we just feel this FVG, right? On the 4-hour time frame, I'll show you exactly what is happening here. So we are now here. Okay, this is what I was saying. After this sweep of this liquidity, I will expect to find the first break of structure which we have here. That is, I'm following the bearish version of the standard trading model. I am doing all this prediction following my model, following this model, the standard trading model. Yeah. Yep. So we expect this guy to be taken. So following the bearish version, there was a sweep of liquidity there. The first break of structure that you can see right here with this guy, then it's high right here, this guy here, which has not yet been swept, right? We'll expect this high to be swept, mitigated, before the market drops down to take these lower lows. That is logically what this model says, right? So we'll be expecting this guy to be taken, then we rally down to take this lower low. But before we take this lower low, see this sweep right here? There will be some reaction of this place. It will be tough for the market. Okay, let's still move on. Coming here on the 4-hour time frame, this is what I can say. There was a sweep of liquidity. This guy was the one that we drew on the daily. The first break of structures high, whereby we are expecting the market to sweep this liquidity over here before we drop down. We expect the market to sweep this liquidity and mitigate some form of a goalkeeper around here. Before we drop down to take these lower lows. See, there is a lot of liquidity build up here. All this is liquidity lying here. All these are stop loss lying up below here. Yes, maybe he'll mitigate this goalkeeper around here. But again, what was happening here was that this flash here was after the sweep of liquidity. Then we rallied up. The first break of structure that we saw with this guy, and its lower low with this guy, which had not been taken for last week and the week before. here formed equal lower lows, whereby the market just reacted off the first break of structure that was formed after the sweep of this liquidity, and we went to take this high, thus following the bullish version of the standard trading model. And then we came here, okay, we came here, now we took this lower low, we just merely wicked on it, right? After wicking on it, then we are seeing the market rolling up. See, there was a sweep of liquidity here. Then we'll be expecting the market to react off of some defense, some goalkeeper around here, or we find the first break of structure around this move here to short the market. So the market dropped a bit. Now reaching here, there was some news release, NFP, yeah, and then boom, it was just crazy. I was expecting the market to drop down on the lower time frame, to reverse from around this place, but you can see the market came really down to take this first break of structures on the 4-hour time frame. Yeah, took that lower low and still flashed up. That is following the bullish version of the standard trading model. Yeah, this market, when you drop down on the 30 minutes time frame, there was some liquidity sweep, but it didn't respect them, and the news just came for the first break of structure, the lower low, which was around here, and boom, and it flashed up to take these higher highs, right? Take these higher highs. I don't know exactly what is happening here. The market just wicked, barely swept that. It has not swept that high, but it's just coming down. It's coming down, right? But I would expect this guy to be taken before we drop. Yeah, that is what I am expecting. Yeah, but anything can happen. It's no anything can happen. Okay, because we are kind of, this market wants to reverse somehow, because if we take this high, we can take this high, maybe we'll reverse off a bit here of this guy, then we come again to retest this guy, and boom, we go down. Or we might come and sweep these highs. Anything can happen, so it's just we are a pattern forming. It has started raining, and you can see those are sounds producing. I'll produce from the roof. You can see again. Okay. This was just a picture on the 30 minutes time frame. Just explained everything on the 4-hour time frame. I'll be expecting this guy to be taken. There will still some form of reversal, maybe around this place here. I don't know exactly. Yeah, the tip of liquidity. And before you rally up to take these lower lows, and that's what I'll be expecting. See the way this guy was just mitigated. This lower low was not taken. The market boomed up. Yeah, there's algorithm working. An algorithm working. Thank you so much, and see you in the next video.